We also got new data on auto loans today that is renewing concerns the American consumer may be struggling financially. The percentage of buyers behind on car payments by a couple of months ticked higher in the fourth quarter. Phil LeBeau has the details.
It's getting a little tougher for some car buyers to make their monthly payment. The credit firm Experian, which tracks millions of auto loans, says the percentage of borrowers missing payments for more than 2 months edged higher at the end of last year. Just under 1% of all auto loans were 60 days delinquent, still well below the rate seen in the last recession. But with the average amount borrowed climbing to a record high above $31,000 and the average loan amount also hitting a record high of $545 a month, there's concern Americans may be getting overextended, taking out bigger auto loans than they can afford.
We don't want to paint too dark a picture here, but the bottom line is that the trend is not our friend when you think about that the economy is really strong. Why are people falling delinquent on their loans when we're creating 300,000 jobs? That's the question everyone should be asking themselves.
After the best 4-year stretch of auto sales the U.S. has ever seen, there's still a healthy appetite for new models, especially trucks and SUVs. And that's the reason consumers are borrowing more money. Those bigger vehicles come with bigger price tags that keep climbing as automakers add more technology and features. In fact, the average amount paid for a new vehicle has jumped 41% since 2010. And the news is not much better when it comes to used cars. Late last year, the average loan for a used model topped $20,000 for the first time ever. Higher prices are not slowing down demand for pre-owned models. Last year, an estimated 40 million used cars were sold in the United States, and that number is expected to move slightly higher this year. Phil LeBeau, Nightly Business Report, Chicago.